This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks follow U.S. peers lower after a surge in Treasury yields on bets the Fed will delay cutting rates due to inflation risks. Samsung rises after Nvidia founder Jensen Huang expresses confidence in the Korean firm despite disappointing earnings as it plays catch-up in AI. Plus, President-elect Donald Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal, and take control of Greenland. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Bersachi. Well, let's get you caught up on all that happened across Wall Street yesterday, because we did see a broad-based sell-off across not only stocks, but for the bond markets. That came in the wake of some U.S. economic data, including services in the services industry and in the jobs market, that suggested that we are still seeing resilience in the U.S. economy. After we got that data coming through, traders paired their bets in the market in terms of when we will see the next Fed rate cut coming down the line in 2025. Traders now see the next cut happening in July versus June, as previously expected ahead of all of that data. Of course, we also had those Trump comments that just underscore that we are heading into a lot of uncertainty over policy. If we take a look at how we're shaping up this morning, we are perhaps looking a little bit better, at least in terms of the U.S. equities market. Futures this morning indicating we could see a potential recovery at the open. But 10-year yields here, this is actually really interesting, because just a couple of minutes ago I was looking at this and Treasury yields had come back down. But nope, here we are up again after the sell-off yesterday drove yields higher. We are now very close to 4.7%. If we pop higher above that 4.7%, that would be the highest levels for the 10-year yield that we've seen since 2023. So really a lot of movement in these bond markets that you want to keep an eye on. And Bitcoin as well, we're pretty much flat, but I put this up because yesterday we had losses of more than 5% as the cryptocurrency was really swept up in that risk-off sentiment. Now, let's flip this over and talk about Nvidia for just a moment. We talked about Nvidia a lot yesterday. We've been talking about it all week. It's been a big week for the company. We had CEO Jensen Huang opening up the Consumer Electronics Show on Monday night, unveiling new products. He spoke exclusively to Bloomberg yesterday as well about the company's prospects for growth, but that has not impressed investors. So Nvidia was down more than 6% yesterday. And you can see here on this chart that those losses led to the company's market cap dropping by almost $230 billion. And that was the worst one-day loss in the market cap since September. So not a very good week for Nvidia, but of course coming off of a stellar 2024. Well, let's check in on how markets in Asia are faring now. Avro Hong is standing by in our Singapore studio. Avro, how are you this morning? What are you watching?
I'm doing great, Christine, but Asia stock markets, not so much. The region's benchmark reversing those gains from a day ago, and this is no thanks to that handover from Wall Street. As you say, that steep Nvidia drop not helping as well. So tech shares are under pressure today, save for some of the chip makers, and I think you'll talk about that in just a bit. But when we look at how Asia was already setting up, it was also the joint briefing among Chinese authorities that, eventually failed to excite investors, that left Chinese equities on the back foot. So sinking further into negative territory, the CSI 300 and the Hang Seng. On the Hang Seng, this is after already a string of losses so far this year. And amid all this, we've also seen the resurgence in the US dollar, given the expectations dwindling that we'll see a cut before July. So that's really putting pressure on Asia currencies as well, including the Chinese yuan. And today we saw the PBOC come through with fixing support, the strongest versus estimates since April. So these are among the things that we're watching in the Asia Pacific. Christine.
Avro, thanks so much. That's Avro Hong in Singapore. Well, let's talk about some corporate news now. Samsung shares rose after Nvidia founder Jensen Huang expressed confidence in the company's ability to resolve technical issues with its highest-end memory chip. This comes after the South Korean firm reported lower than expected profits in the latest quarter. Samsung is working to catch up in the AI chip market, where it faces strong competition from SK Hynix and Micron Technology. And let's also continue talking about Nvidia, because earlier the company's shares fell after a wide-ranging product presentation by the CEO failed to win over investors in the chipmaker. Jensen Huang, that is the CEO, he spoke to Bloomberg Technology about plans under incoming President-elect Donald Trump, as well as the impact of AI on the gaming industry. Take a listen to all he had to say.
AI is going to reinvigorate the video game industry. On the one hand, for developers, it's going to reduce the cost of creating the content. On the other hand, all of the characters that are in the games are going to be smart characters in the future. So every time you interact with them, they're going to be interacting with you in a much more intelligent way. And so the games are going to be more interesting. The characters are going to be more interesting. The content development cost is going to decline. And that's going to be really great for the industry. And so I think that the future is really bright for video games and these virtual worlds. And artificial intelligence is going to really reinvigorate it.
Project Digits. May I pick it up?
Yeah.
$3,000 Project Digits.
Yeah.
A supercomputer you can put on your desk.
Exactly. Could you imagine you're just sitting there just like that? You're working on your PC.
Well, I can't imagine. Why would I need one of these? Probably not me. But how big is the addressable market for this? What is the addressable market?
There are 30 million software developers. There are probably something along the lines of 10 million designers around the world. Probably another 20 million creative artists. Hard to say exactly how many students. I'm going to guess probably a couple of 100 million students around the world. Everybody's going to have to afford it. Everybody's going to have to well, they can afford computers. And so if they can afford computers and they would like to have a companion that helps them do AI, this is the way to do it.
Can I just clarify something on it? I think you said on stage Mac OS, Linux, and Windows, but the communication said just Linux.
No. Whatever computer you use, you're literally enjoying how it's going to be used. It's sitting right there, and you just connect to it wirelessly like it's your personal cloud.
I promised the audience I'd clarify that because they're excited. We're running short on time. President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if Nvidia is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw Xpeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. It's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. How have you prepared for that, Jensen?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective. And I'm sure that the administration will make the right moves. That's in the best interest of our country.
Well, that was Nvidia CEO Jensen Huang speaking with Bloomberg Technology co-anchor Ed Ludlow. Now let's talk about U.S. politics, because in the space of just an hour last night, U.S. President-elect Donald Trump threatened to absorb Canada. He also declined to rule out using military force to seize the Panama Canal and Greenland. And on top of all of that, Trump promised to change the name of the Gulf of Mexico to the Gulf of America. To talk more about this, Bloomberg's John Harney joins us now from New York. So, John, thanks for joining us after such an hour of wide-ranging comments. Some had said going into the incoming administration that Trump would perhaps be a bit more rational, a bit more stable. Last night certainly didn't seem to convey that. What did we hear from Trump? What were the top takeaways, the top headlines for you?
Well, he leaped from topic to topic, policy to policy, and continent to continent. He reiterated that he wanted Canada to become part of the United States, as you just said, and to somehow the United States should somehow take possession to purchase or perhaps even military force the territory of Greenland, which is an autonomous part of Denmark. And he also went back to say that the United States should take possession again of the Panama Canal, which the United States relinquished during the presidency of Jimmy Carter, who ironically or oddly or whatever, his state funeral will be this week in Washington, and he's lying in state. President Carter's lying in state at the Capitol as we speak. So it was certainly a display of a very aggressive foreign policy on the part of the Trump administration. That's going to be, it's going to. There's no part of the world that's probably going to escape its reach.
Yeah, and how much of what Trump is saying here or threatening to do is proposing, or what he's proposing is actually doable?
Well, that's a very good question. Justin Trudeau, the outgoing Prime Minister of Canada, said forget it, and his the leader of Canada's Conservative Party, also said Canada is not going to become part of the United States. In Denmark, the Prime Minister Frederiksen, who had experience during the first Trump term when he brought the whole idea of buying Greenland, was more circumspect, but said this is really going to be up to the people of Greenland, and that basically it will remain part of Denmark. In Panama, you've seen more. You've seen not there have been no official government response today, but you've seen some strong opposition to this idea of the Panama Canal. But as far as whether or not any of this can happen, don't forget 4 years ago, on January 8th, 2020, Donald Trump was considered to be washed up. His attempt to undo the election had failed. The insurrection on the Capitol had not succeeded, and he was about to head into self-imposed exile at Mar-a-Lago. And now we're talking about his new agenda.
Yeah, that's right. John, thanks so much for sharing all your insights. That's Bloomberg's John Harney in Washington for us there. Well, back to the Middle East, but still related to Trump. DMAC Group is to invest $20 billion to build new data centers in the United States. The announcement was made by the chairman of the Dubai-based company, Hussein Sajwani, who was standing alongside President-elect Trump last night. The investment is part of DMAC's expansion into data centers business, with plans to invest $3 billion in Southeast Asia in the coming years.
The investment will support massive new data centers across the Midwest, the Sunbelt area, and also to keep America on the cutting edge of technology and artificial intelligence. The first phase of the project will be in Texas, Arizona, Oklahoma, Louisiana, Ohio, Illinois, Michigan, and Indiana.
Trump's resort near Miami is to host the Saudi-backed LIV Golf Tournament in April. The event marks the fourth straight year that LIV will come to the Trump National Doral Golf Club, but the first time with Trump acting as sitting U.S. president. LIV is bankrolled by Saudi Arabia's sovereign wealth fund and has also hosted events at other Trump Organization properties. Still ahead, hear why JPMorgan Asset Management says the U.S. labor market is robust and what this means for their investment strategy. Next, this is Bloomberg. Stocks in Asia have followed their U.S. peers lower after a sell-off in Treasuries on bets the Fed will delay interest rate cuts due to inflation risks. Let's bring in Marcella Chow, VP and Global Market Strategist at JPMorgan Asset Management. Marcella, great to have you with us after such a big day for markets yesterday. It was ugly out there for bonds. What do you think is really driving the move higher in yields that we are seeing? Because we're at quite elevated levels now, and there's a lot of talk out there about us potentially moving even higher.
Yes, indeed. Market, I think, is still concerned about, for example, the U.S. debt sustainability, higher energy prices, and also all the ongoing geopolitical uncertainties. And that's why we see 10-year yields rising, and also eventually we saw U.S. dollar reversing the trend and also rising at the end.
Yeah, and we got a paring back of Fed rate cut bets yesterday, or rather not necessarily a paring back, but a pushing back of the timeline for the next rate cut from the Fed. What is your expectation for where the Fed takes policy from here?
Yes, right now, JPMorgan Asset Management believes that like you said, we see that the Fed remains likely to be more cautious going forward in 2025. And so what the markets will likely see is in terms of rate cuts, we'll still be in a rate cutting cycle, but then the magnitude and the pace of rate cut will likely be slower than expected, or the magnitude-wise will be smaller than expected. So right now we're expecting around 2 cuts for 2025, but this is also very key depending on, for example, on the nature, timing, and scale of potential measures delivered by President-elect Trump, and also the ongoing macroeconomic fundamentals development in the States.
Yeah, and we got data yesterday showing that we got the ISM services gauge. We also had job openings that jumped. That was part of the reason why we saw some of the market action that we did yesterday. We are very close to getting the next U.S. jobs report as well. Bloomberg Economics suggests that we could get a blowout figure to the upside. What is your expectation for Friday's NFP print?
Yes, right now we're seeing probably around an increase of around 150,000 to 200,000 job growth for December. And meanwhile, in terms of unemployment rate, given the continuous surge in labor supply from immigration, there might be an employment rate increase to 4.3% from around 4.2% in November. But from survey, we see that, for example, consumers continue to see jobs are still plentiful, and actually with employers, they're still finding it hard to actually attract qualified applicants. So labor market-wise remains quite healthy. And for the rest of this year, we're expecting around 150 to 175,000 of addition per month. But this all depends on the upcoming policies being delivered and how that will affect the labor market.
Yeah, there's so much uncertainty around policies, and we heard from Trump last night about a lot of the intentions that he has, though unclear that he can carry out on some of the things that he is threatening to do. We talk a lot about the fallout for China as an example. What are the other economies out there that we could potentially see hit from Trump protectionist trade policies that we perhaps don't talk about enough?
I guess within Asia, other than China, I think China is a key that investors will continue to focus on. But other, because of how we continue to see AI, etc., and with continuous potential impact on trade relationships going forward, that also may affect export growth momentum across Asia as well. So, for example, the North Asian regions that are very export-oriented might get affected. But then we believe that the AI trend can continue to support the export momentum going forward. But so right now, for investors, we continue to advise them to actually to diversify in terms of their portfolio construction to, for example, those that are less sensitive to trade tensions. And so we continue to advocate, for example, ASEAN and India, particularly because those countries can benefit from resilient U.S. dollar.
Marcella, thanks so much for being with us today, with us in our Hong Kong bureau. That's Marcella Chow, VP and Global Market Strategist at JPMorgan Asset Management. Well, coming up, investors in China's $11 trillion government bond market are becoming so pessimistic about the world's second largest economy. We will tell you why next. This is Bloomberg. Investors in China's bond market have never been so pessimistic, with some now piling into bets on a deflationary spiral. Asia credit editor Finbar Flynn joins us now to discuss what this means for the world's second largest economy. Finbar, it's great to have you with us. Why are people becoming so worried about China and this potential deflationary spiral?
Good morning. Yes, I think we're getting to new territory in terms of where Chinese government bonds, their yields have been falling. So As your viewers may know, the 30-year bond of China fell below, the yields fell below Japanese bonds last year. But now we've seen this aggressive move down in yields for the 10-year as well. It keeps just falling to record lows. So the bond market is telling very clearly that the deflationary sort of holdback in the economy that's been there now for over 2 years, that it's only expanding, and the markets are reacting to that. And you can also assume that markets are actually looking at the response of the government as well, that the government has come out more forceful in the last, we'll say, 3 or 4 months with some really large statements that, they plan to reduce rates. They're going to take an easier policy in terms of monetary policy. So the markets are really reacting to that.
Does this market reaction suggest that perhaps China won't be successful in rolling out stimulus that will support the economy? And if that is or is not the case, what is the greatest risk for investors in the Chinese market?
So the market here is reacting, in a sense, to comments that came out in large part last month when the government said, and the Politburo said, that they're going to really take, a different stance in terms of boosting consumption, and they actually changed for the first time in 14 years their policy stance. In terms of how they address the deflation, I think you can also look into this, that the market is seeing that the government is actually going to step up what it's been doing in the last 12 to 28 months in terms of the steps they're going to do. And the markets are expecting lower rates in the front end, not only on the back end.
All right, Finbar, thanks so much for breaking all of that down for us. That's Bloomberg's Asia credit editor, Finbar Flynn. Well, let's get a quick check of the markets for you. Taking a look at U.S. equity futures, we continue to push a little bit higher, indicating that we could see a recovery at the open on Wall Street today after a pretty steep day of losses for the stock market yesterday. It was really tech that led the losses there. The NASDAQ was down almost 2%. We're also seeing some weakness come through in the European futures market this morning. And I just want to note that as we look at the Treasuries market, which sold off heavily yesterday, we're seeing yields flop around all over the place at the moment. So a lot of volatility in the Treasuries market. Coming up next, a new report on VC funding in the Middle East shows a decline in 2024. We are going to be talking about all of that and the trends that are driving the venture capital space. We're going to be discussing all of it with MAGNiTT's Philip Bahoshy next. Stick with us. This is Bloomberg. This is Horizons, Middle East and Africa. Our top stories this morning. Asian stocks follow U.S. peers lower after a surge in Treasury yields on bets the Fed will delay cutting rates due to inflation risks. Samsung rises after Nvidia founder Jensen Huang expresses confidence in the Korean firm despite disappointing earnings as it plays catch-up in artificial intelligence. Plus, President-elect Donald Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal, and take control of Greenland. It's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai. Let's take a look at these markets because we had a pretty broad-based sell-off yesterday across both equity and bond markets in the U.S. When we look at how we are tracking this morning, U.S. futures are indicating that we could see a bit of a recovery on Wall Street today. It was really big tech that led losses yesterday. The NASDAQ 100 had come down almost 2%. But the big story yesterday was really in the Treasuries market. Yields came up across the entirety of the curve, and you can see here that the U.S. 10-year yields, actually, we've been hopping around. When I was just sitting at the desk a moment ago, we were up. Now we're coming back down again. So that just goes to show we're seeing a bit of volatility in the Treasury market. All of this on the back of expectations that we may see the Fed delay rate cuts in 2025 to perhaps the back half of the year versus the first half of this year. A lot of debate around the strength of the U.S. economy. And of course, we get the U.S. jobs report on Friday, which the market is anticipating for the next key input that Jerome Powell will be looking at as he decides decides where U.S. policy goes next. And now Bitcoin, I put this up for you here because we are moving a bit lower this morning after losses of more than 5% yesterday. The cryptocurrency being swept up in that risk-off rally that was reverberating across global asset classes yesterday. Now, let's talk about big tech for a minute. We spoke about Nvidia a lot yesterday. We're probably going to continue talking about it a lot over the course of the rest of the show. Yesterday, the shares dropped more than 6%. It's been a big week for the company. There's been a rollout of new products. We have the Consumer Electronics Show going on in Las Vegas. But from everything that we've heard from Nvidia over the last 24 to 48 hours, investors don't seem to be very impressed. The company's shares fell 6%. And those losses meant that the company's market cap dropped by almost $230 billion yesterday. That was the worst single-day loss for the market cap since September of 2024. So let's get more on tech and some of our other top stories this morning. Avril Hong is standing by in Singapore. She's going to be talking to us about Samsung stock because that is in focus after their earnings and some headlines around Nvidia. So, Avril, talk to us.
Yeah. Christine, that's really it, right? Nvidia's Jensen Huang expressing confidence that Samsung, the South Korean chipmaker, is going to be able to kind of iron out the kinks technologically speaking. As you may know, Samsung has been struggling to get certification for its latest products, and the stock is still gaining ground despite, as you say, that profit miss, although the profit miss has narrowed in the past couple quarters. And we also have some analysts flagging that the weak earnings scorecard might not be entirely a surprise given how it's really faced challenges on some of its mobile products and weak demand from China as well. Regardless of these gains you're seeing today, it's still been a really challenging backdrop for Samsung. Not only is it fending off competition from some of its smaller rivals like SK Hynix and Micron, it's also been recently going through that management reshuffle and recent disagreements with its workers. So keep that in mind even as we see the gains in Samsung stock today. Christine?
Avril, thanks so much. There really is so much going on in big tech these days. That's Avril Hong standing by, as always, in our Singapore studio for us. Let's turn to the Middle East now. Saudi Arabia's Almoosa Health surged in its trading debut, bucking the recent trend of disappointing listings in the Middle East. That's after a $450 million initial public offering in Riyadh. For more on this, we're joined by Laura Gardner-Cuesta, our Middle East equity capital markets reporter. So, Laura, we're coming off the back of a very busy year for IPOs in general in the Middle East, but Saudi Arabia in particular, this was the first listing of a company for Saudi in 2025. What was the stock market reaction? And talk to us about how that differed from the trend that we've been seeing for the market in recent months.
Thanks, Christine. Yeah, absolutely. I think right now we are seeing a bit of a dichotomy between deals in the IPO space. So on the one hand, we've had very large landmark IPOs that happened late last year that have performed pretty poorly on their debuts. I'm talking about Talabat, Lulu Retail, Oku Exploration Production. All of these saw a pretty muted debut, and only Talabat is now trading around offer price. And on the other hand, we have smaller IPOs, particularly in Saudi Arabia, one of which is Almoosa, who've had this first day pop that the region is used to. So it's a bit of a mixed picture. I think what investors are saying in terms of the poor performance that we've seen, they're talking a lot about valuations, about how companies need to be a bit more careful with these. And going forward, we'll need to see how companies and bankers essentially go about these valuations in the next few deals.
Yeah, so it sounds like going forward, we're going to be looking at the valuations when we see these IPOs coming through and the trading debuts. You are constantly looking at equity capital markets, and I'm sure you have a long list in your head of all of the listings that we are expected to see this year. What are we going to see come first out of the UAE, and also what's next in Saudi Arabia in terms of IPOs and then also trading debuts?
Yeah, so let's start with trading debuts. We have another Saudi IPO that we'll list today, which is Nice One Cosmetics, an online cosmetics retailer. So we'll keep an eye out for that. And then in terms of new listings, new IPOs. In Saudi, we are expecting Ajada, which is a tech services firm. They recently got CMA approval. Bloomberg reported that Goldman Sachs is advising them on the IPO, so that's something to watch. And in the UAE, we're expecting two state-owned companies to come to market. First one is Dubai Holding, which is preparing to list a REIT. They also have banks and are working on the transaction. And very much anticipated is the Etihad IPO, which is also expected to happen this year. So we'll keep an eye out for that. And again, looking at valuations and how this will be a market test, I think will be a very important transactions.
All right, Laura, thanks for breaking all that down for us. We appreciate it. That's Laura Gardner-Cuesta, our Middle East ECM reporter. Well, let's stick on the topic of the Middle East because venture capital funding in the region saw a 29% decline in 2024, despite a growing number of deals. This comes as investors moved towards smaller early-stage investments. That is all according to a report published by the Dubai-based venture capital data platform MAGNiTT. And joining us now is Philip Bahoshy, founder and CEO of the firm. So, Philip, great to have you with us today. Let's talk about this annual report. We saw a decline across the Middle East, also broadly for emerging markets. We're talking about smaller ticket deal sizes, but paint the bigger picture for us. What has led to the drop in VC fundraising?
Absolutely. So I think it's always important to put the global context first. So international publications are highlighting that globally, we've basically seen a plateau of venture capital investments. In fact, a report that was published just yesterday highlighted there was just a small percentage increase in capital deal flow, but the actual number of transactions are down year on year. So no region has been immune to what has been happening in venture capital in terms of a slowdown compared to the peaks of what we saw in 2021 and 2022. Here in the region, the high-level figure has seen a drop of almost 29%. But there are some very interesting points of signals of a recovery happening. Number one, more international investors are investing in the region than we've seen in previous years. More investors are participating in venture capital. And the big driver for the slowdown has been what we call mega deal investments, investment deals that are greater than $100 million, which saw a 66% drop in value compared to last year. Those are deals that tend to be impacted by the likes of interest rate hikes, inflation, and challenges around the macroeconomic environment. Early stage, which tend to have a 7 to 8 year payoff in terms of return on investment, saw 50% of all transactions last year, which creates deal flow for the years to come. So there are some positive signs despite the high level number being down year on year.
So is the smaller ticket sizes that we are seeing, is that truly a reflection of the macroeconomic environment, or is it also down to the appetite of investors as they look into what they want to invest in?
I think there generally is an appetite for venture capital and as an asset class here in the region. And what it shows is the shift of investors towards earlier stage startups that can have a longer term payoff in terms of ROI than those bigger tickets which require a much quicker return on those investments. We just talked about the IPOs. There's a lot of discussions around exits and the need for liquidity. The report also highlighted in terms of M&A, a third progressive decline in the total number of M&A transactions that are happening here in the region, albeit there's a lot of discussion both here, UAE and MENA-wide, on the importance of IPOs. So I think that that's another opportunity that presents itself in the next year.
Yeah, if we break it down by region, Saudi Arabia led the Middle East in terms of value for deals, but the UAE led the Middle East for deal count. One thing that is mentioned in your annual report is the importance or the growing role of corporate venture capital in this region specifically. What role do you see CVC playing currently, and how do you see that potentially changing over the course of 2025?
I think that's a great question because corporate venture has a big role to play, as well as private equity, and I'll come on to that in a second. We did see participation of corporates, whether it's through specific funds or off-balance sheet investments that they make in this space. But I do think that there is a growing appetite for corporate, whether it's through acquisitions of companies here in the region or direct investments to fuel the venture capital space. The opportunity definitely presents itself at later stage investment where private equity can play a role specifically for companies that are looking to IPO list to fill the gap at late stage investment and those mega deals to drive the venture ecosystem.
Yeah, we have seen some names like Aramco's venture capital arm, for example, has been quite active investing in AI, for example, over the last 6 months. When we look broadly at emerging market fundraising, Singapore tops the list. I was really surprised, though, because I actually covered your 6-month report at the half-year mark, and Turkey was nowhere to be found in the top 5, yet it is in the top 5 now. What drove Turkey to become a top performer for emerging markets? Something must have happened in the back half.
Absolutely, and that's why it's a 12-month report. Is really interesting to see the fluctuations that happen throughout the year. So the emerging venture market report covers Africa, the Middle East, Southeast Asia, and we include Pakistan and Turkey. Interestingly, it can take one mega deal investment, which was the insider transaction that took place in Turkey, that brought them up within the top 5 ranking. And that really shows to actually the sizes of venture capital investments here compared to what's happening in the US or Europe are still relatively small compared to global benchmarks, that one transaction can shift a geography into the top 5. They've always been a very fertile country in terms of investment transactions, and they've always ranked in the top 5, if not second, in terms of the total number of transactions, which tends to be at early stage. But for the total amount of capital, it's those big deals that drives that investment ranking.
Yeah, really quickly, what was the biggest takeaway for you from Africa?
I think that the reliance on international investors historically has been a big driver of venture capital investments in Africa. In the last couple of years, those entities have been focusing on their home regions and on their own portfolios, and that we hope to see that continued interest in Africa coming in the next couple of years to drive back the investment activity in the African VC ecosystem.
Yeah, really interesting. I have a lot of interest in the VC story, especially I'm based in Saudi, and I feel like that country is just really getting off the ground. It's really fascinating. That's Philip Bahoshy, MAGNiTT founder and CEO, and do go check out our story on your Bloomberg terminal, which has all the details on that annual report. Now for a look at some of the other stories that we are following. JPMorgan is said to be planning to end its hybrid work option for employees, requiring everyone to return to the office 5 days a week. Sources say the bank could announce the change in the coming weeks, replacing an existing 3-day mandate for many of its workers. JPMorgan employs more than 300,000 people globally. A fast-moving wildfire has ripped through an affluent area of Los Angeles, destroying homes and forcing thousands of people to evacuate. About 30,000 people were ordered to leave their homes after a brush fire erupted in the Pacific Palisades community, causing panic and also traffic gridlock. The blaze was at almost 3,000 acres and remains uncontained. And coming up, China's foreign minister kicks off his tour of Africa as Namibia seeks investment in nuclear power from Beijing. We're going to get all the details next. This is Bloomberg. One of the world's largest uranium producers is seeking investment from China in nuclear power. Namibia wants to boost its role in the global push to clean energy. President Ngola Mbumba met on Monday with Chinese Foreign Minister Wang Yi, who was on a week-long visit to Africa.
The friendly cooperation between China and Namibia has great prospects. We share political trust, and our economies are highly complementary to each other. Most importantly, China has the firm policy and conviction to strengthen friendship with Africa.
Let's get more now with Bloomberg's Andiro Oganga. So, Andiro, what more do we know about Namibia's hopes for Chinese investment in nuclear power?
Hi, Christine. So Namibia's president says they want to add value to their uranium for peaceful development of nuclear energy. And these corporations have already begun. In September, we saw China General Nuclear Power Group together with Nam Water form a joint venture to build a $161 million desalination plant to supply water not only to uranium mines, but also to neighboring communities. And Namibia is also hoping to expand that operations into areas such as emerging technology. They want to tap into China's outbound tourism market and also secure funding for the upgrade and building of a new international airport. China says they see Africa as a place of development opportunities, and it could be a great market for their solar products, EV market that have hit overcapacity in the US, and also great infrastructure projects are coming up on the African continent. And this could give work and opportunities to Chinese firms that are struggling because local governments are cutting back on spending due to indebtedness.
Right. So if China sees such opportunities that exist for it in Africa, where else is the foreign minister expected to visit, and how are these visits expected to play out?
The foreign minister will be visiting the Republic of Congo, he'll be visiting Chad, and he'll be visiting Nigeria. And the AfroCENA Center says that this visit is expected to solidify the cooperation between Africa and China, but also mark the beginning of the implementation of the action plan from FOCAC summit that was held in Beijing, where $50 billion was committed to the African continent. And part of this cooperation includes areas such as trade, healthcare, and connectivity.
All right, Ondiro, thanks for breaking all that down for us. That's Bloomberg's Ondiro Oganga. Now, for a look at some of the other stories that we are following this morning, John Mahama has been inaugurated as Ghana's president, returning to the office he held 8 years ago following his commanding victory in December's elections. Now, Mahama trounced the ruling party's candidate amid voter anger over economic hardship that was exacerbated by Ghana's sovereign debt default in 2022. The new administration faces the task of steadying an economy beset by crippling debt and also high living costs. African leaders have pushed back after French President Emmanuel Macron said that some of their nations owed their sovereignty to France after its troops intervened in their countries. Macron's comments were met with criticism from Senegal, Chad, and others who have argued that French interventions have often been driven by self-interest and have contributed to instability in the region. Kenya's economic growth decelerated in the third quarter, growing at its slowest pace in almost 4 years. GDP expanded 4% in the 3 months to September from a year earlier, compared with 4.6% in the previous quarter. This as all key industries recorded less output following anti-government protests. Coming up, Hyundai CEO says Elon Musk's close relationship with Trump could be good for all car makers. More on our exclusive interview with the company's new boss. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Berg in Dubai. Hyundai Motor CEO says the car maker is not concerned with how it ranks against competitors, but is focused on providing customers with the best product. Jose Munoz told us exclusively about the company's China strategy and his response to the potential merger between Honda and Nissan.
If you look back, our company took the decision to make a significant investment in the U.S. during the previous Trump administration. We haven't invested in the U.S. because of IRA or because of incentives in general. It's not a good policy to just simply make an investment because of incentives, because they can come and go, right? So as such, we believe that the U.S. market is the most important for us today, and it's going to continue to be the most important in terms of not only the absolute, but also the growth. And therefore, investing and localizing is a good strategy. So when you tell me, hey, what happens if IRA goes, okay, first of all, that's not my responsibility, and I'm not in charge of the policy and the administration, but I think we are in a better place today than we were 4 or 5 years ago, simply because the investment gives us much more flexibility.
Do you think the Trump administration will be successful in rolling back some of those pro-EV initiatives, given the fact that it has to be approved by Congress? We cannot influence the government, and basically our only job is to be able to adapt flexible actions and the right decisions to be able to be competitive and win in the marketplace regardless. So at the moment, if you ask about the position of the most of the members of the Alliance for Automotive Innovation, where all OEMs belong to in the US, so probably most of them, if not all, would tell you that they support the current structure, because there is a fact that there has been a growth trend in terms of the introduction of the EV technology. There's more offer, there are more people buying, etc. But there is no doubt as well that the pace has been slower. So most of the OEMs would like them to stay. But in our own position, again, we didn't invest because of the incentives, because we took the decision before. And then if the incentives go away, so we're going to continue with our strategy,
which is no other than providing the best product and the best technology at a competitive price to our consumers. And again, our numbers suggest month in, month out that sales of EV and lately hybrids are the ones that are driving the growth for us and for the industry.
How concerned are you, though, that the head of your chief competitor on the EV front, Elon Musk of Tesla, will have an outsized influence in the White House?
I don't see that as a concern, honestly. So if anything, I think having someone who is very close to the US industry and to the EV world, I think it should be positive for the industry, because I think it's in his own interest and probably it's in the interest of the country to trigger investments and growth, and also to ensure that we maintain competitiveness in our country vis-a-vis Chinese and other competitors, right? So I think that is positive.
That's Hyundai Motor CEO Jose Munoz there. Now, let's take a look at these markets. U.S. futures are pushing higher after the down day on Wall Street yesterday. The big question today is going to be whether we see losses for big tech carry on into the upcoming session. U.S. Treasury yields are jumping around at the moment. We had a lot of losses coming through yesterday. The U.S. 10-year yields popping higher to almost 4.7%. That will be the key place to watch today. We get Fed minutes. That's going to be something to keep on your agenda. And when we look at oil markets as well, we're seeing a little bit of an uptick. Well, coming up, stick with us because we're going to be talking more about all of these markets with Jennifer Zabazaja in Johannesburg. This is Bloomberg. This is Horizons, Middle East and Africa. Our top stories this morning. Asian stocks follow U.S. peers lower after a surge in Treasury yields on bets the Fed will delay cutting rates due to inflation risks. Samsung rises after Nvidia founder Jensen Huang expresses confidence in the Korean firm despite disappointing earnings as it plays catch-up in artificial intelligence. Plus, President-elect Donald Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal, and also take control of Greenland. Well, it's just gone at 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone at past 7 a.m. Welcome to the second hour of Horizons, Middle East and Africa. Good morning to you, Christine.
Yeah, hey, Jen, let's take stock of where the markets are this morning after a pretty brutal sell-off across both stock and bond markets yesterday. Much of the sell-off that we saw in U.S. hours yesterday was driven by some economic data that came out of the U.S. and underscored the resilience of the U.S. economy that prompted traders to push back the timing or the expected timing of the next Fed rate cut to the second half of 2025. On top of all of that, of course, we had the wide-ranging comments from Trump in that speech that perhaps just underscored that we are heading for uncertainty over the course of the next year as we consider all of Trump's trade policies and the potential for tariffs. Checking in on how we are right now, though, U.S. futures are indicating that we could see a recovery on Wall Street later today. But Treasury yields, they continue to push higher, or rather, you can see here, we're unchanged. We've actually been moving around a lot over the last hour or so. So some choppy trading in the Treasuries market, some volatility. A place to keep your eye on, though, is if this 10-year yield rises to 4.7%. If we pop above that level, that'd be the highest that we have seen the U.S. 10-year yield since 2023. And then Bitcoin, we're a bit weaker this morning after another loss yesterday of 5% as the cryptocurrency was swept up in that risk-off rally. Another name that was swept up in the risk-off rally was Nvidia. The company, we've been talking about it a lot this week. Shares were down more than 6% yesterday after the rollout of new products and some of the comments that we heard from Jensen Huang in his exclusive interview with Bloomberg, by the way, that may have disappointed investors. So we saw that drop of 6% for the stock price. And you could see here that this led to a shaving of the market cap, shaving off of about $230 billion, the worst day that we've seen for market cap losses for the stock since September. So something to keep an eye on today is, we will be looking to see whether those losses sustain rain or not. Let's check in on how markets in Asia are faring now. Avril Hong is standing by in our Singapore studio. Avril?
Yeah, Christine, we're seeing Asia stock benchmark sinking deeper into negative territory as the session progresses. I mean, this is following on from a poor Wall Street handover. You just talked about those Nvidia losses, but also worth noting what's happening in China. Today, we had a joint briefing from Chinese authorities, and they did announce the boost to consumer subsidies, but it fell far short of the big bazooka stimulus impact. We're back from the lunch break in the Greater China market, and the losses are accelerating a little. And this is against the backdrop of a lackluster economic recovery, and as tariffs loom ahead of the incoming Trump administration. So all in, not a lot of appetite for Chinese stocks, a lot of selling pressure indeed. And the stock that we're also focusing on today is that of Tencent, following its inclusion on the U.S. Defense Department blacklist. Steep declines just a day ago, and it's just made its biggest share buyback since the year 2006. Apart from that, the movers and shakers include the chip names. Today, TSMC is the big drag on the region's benchmark, while Samsung is going the other direction. Guys?
Thanks so much, Avril. And I've got to say, we're both wearing red today. Perhaps we're reflecting the market mood out there. That's Avril Hong standing by for us in Singapore. As always, let's talk more about Samsung. Avril mentioned it there, but we need to dive a bit deeper because Samsung shares actually rose after Nvidia founder Jensen Huang expressed confidence in the company's ability to resolve technical issues with its highest-end memory chips. This comes after the South Korean firm reported lower than expected profits in the latest quarter. Managing editor for Asia Technology, Edwin Chan, joins the conversation now. Edwin, thanks for being with us. I'm not sure where to start. We have results that didn't look so good, but some promising signs from Nvidia here. I guess let's start with the earnings because we had a profit miss, a revenue miss. What drove the headline figures here, and what's the read been out there for you?
I think two things. I think Jensen's timing was really good. I think his comments weren't strikingly different from ones he'd made months before. Consistently, he has expressed confidence in Samsung's eventual ability to join its roster of HBM, high bandwidth memory chip suppliers. But again, the timing and I guess the venue of the forum, CES in Las Vegas, lent a bit of extra emphasis to his words. And I think he did go a little further in the sense that he was talking about how he was as confident in Samsung as if tomorrow were Wednesday or something like that. So I think the market liked that. They were looking for perhaps an excuse to get back into Samsung, always remembering Samsung had lost something like a third of its market value over 12 months. And a lot of that, of course, is tied up with Nvidia. So when those bad results came in, I think a lot of people had expected perhaps the worst. And then perhaps the valuation offered a buying opportunity for some, and then Jensen's comments did the rest.
Yeah, and if we just talk more about the challenges that Samsung faces from here, you spoke a bit about market share. It's spending heavily on research and development to try and gain back that market share. Has it laid out any specific plans for doing that?
I think one thing the market likes is that emphasis, that single-minded focus on coming back, on a comeback. In terms of specifics, Jensen actually gave us a clue today in Vegas. He talked about how Samsung is going with a new design, quote-unquote, for its high-end HBM. And that could mean many things. I mean, depending on how radical the redesign is, it could, again, give Samsung the opportunity to catch up. Or it could be a huge expense sink, and anywhere in between. But I think in terms of specifics, we'll have to wait. The first and most important thing is for Samsung to win NVIDIA certification on its highest end memory chips. And then we may be off to the races. We'll see.
All right. Edwin, thanks so much. That's Bloomberg's Edwin Chan.
Let's turn to the U.S. now. In the space of an hour, Donald Trump has threatened to absorb Canada and declined to rule out using military force to seize the Panama Canal and Greenland. The U.S. president-elect also promised to change the name of the Gulf of Mexico to the Gulf of America. To talk more about this, let's bring in Bloomberg's senior editor, Derek Wallbank, joining us now. Derek, many people saying that a lot of these calls pretty improbable. Talk to us about what more we heard from Trump yesterday.
That's right. Look, you have a very emboldened President-elect Donald Trump speaking at Mar-a-Lago to reporters across a whole range of subjects, talking in specific, very hawkish tones about U.S. foreign policy. Now, this is a very confident president-elect who feels like he was given a mandate from winning a majority of the popular vote, who sees universal Republican control of Washington. There's Republicans atop the House, the Senate, and there's a Republican appointed majority on the Supreme Court. So Trump really feels like he's emboldened to be able to do kind of what he wants to do. And part of that is going to be on the foreign policy sphere. You know, you've seen this this individual, when in his last term as president, go out with a very, very aggressive tariff-based policy that hit friends and foes alike. And he has pledged to do more of the same. He sees this as a very effective way of moving the needle. And indeed, Trump has criticized people who say that this would be going down the wrong road by saying that they're weak and they're wrong, and you know, pointing to the stock market under his term pre-COVID as an example of same. Now, you did flick at the idea, and it's worth mentioning. A lot of the things that you mentioned there that Trump said, you know, making Canada the 51st state, buying Greenland, taking back over the Panama Canal are, let's say, highly improbable situations. Never say never in life, but highly improbable. And there hasn't really been any suggestion of how the president-elect would go about actually accomplishing these things.
And Derek, can you just speak to some of the responses that we got as well? Because many leaders responding to some of those claims that and pledges that Trump was making.
Well, it's the word no in a lot of different languages and accents, you know, and we've seen a lot of different attempts to kind of figure out how to say no, because saying no is one thing, but you do want to be able to still advance. And I think there's a lot of, within the diplomatic community, a lot of question. You know, I talk to diplomats here in Singapore quite frequently, and I spoke with one of the country's involved diplomats a couple weeks ago, who was asking, you know, how do you see Trump as, you know, as someone to get along with? Is he someone that you can reason with? Is he someone that you have to put up a tougher stance with? You know, how do you do that? And it really does speak to the idea that folks are really trying to figure this out. Now, in Canada, you range from Justin Trudeau saying there's not a snowball's chance in HE double hockey sticks of this happening. You have Pierre Poilievre, who's the Conservative leader up in Canada, up 20 points in some polls, with an election likely in the near future, putting out similar thoughts. On the other hand, you have the Premier of Ontario going on Fox News and, you know, saying versions of "I love America" and we're better as independent nations trying to get on. So even within that country, you're still seeing a lot of divide in how to express this. But I don't think that you have people who are looking to pick a fight. Now, down in Panama, they had a really interesting response where you had officials saying, "We'll talk to Trump on January 20th when he's president." We'll see how all of that goes, but there's 4 years for the rest of the world to try and figure out how to deal with this person who's going to be, you know, the leader of the largest country by GDP and military in the world.
Absolutely. Derek, thanks so much for remembering this is morning television. Appreciate your reporting as always. Derek Wallbank, Bloomberg's senior editor, joining us there from Singapore. Now, still ahead, hear why MacroVisor says it's clear that the Fed is not hasty about easing and doubts the U.S. central bank will cut this month. That's next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Stocks in Asia have followed their U.S. peers lower after a sell-off in Treasuries on bets that the Fed will delay interest rate cuts due to inflation. Joining us now is Ayesha Tariq, co-founder of MacroVisor. Ayesha, thanks so much for being with us. Let's talk about the market action that we've been seeing. Yesterday was pretty steep in terms of losses for not only the bond market, but also for equities. When we look at the Treasury sell-off, we're now talking about a 10-year yield that's almost at 4.7%. And there are some bond traders out there, some options trading, suggesting that we are heading for 5%. What is your view on the moves that we are seeing in fixed income markets?
Good morning, Christine, and Happy New Year. Thank you for having me back on the show. So, yeah, very interesting situation. Now, this is something that we've been talking about for a while, that, the yield curve is steepening and it's a bear steepening, right? So it's being pulled up by the long end of the curve. And part of this has to do with, all the uncertainty. So first we have inflation expectations going up. We're seeing that even in the Fed's, discussion about pulling back on rate cuts. And then, of course, the fiscal policy environment. We're not really sure what's happening, and that's what the bond market is reacting to. Finally, we also have the U.S. government debt situation. There is a little bit of a scare there as to what's going to happen. I mean, we can't just keep kicking the can down the road. So all things considered, I think, we're going to continue to see long end yields being elevated. And that's not good for the market. The volatility is, what worries me the most.
When we look at what happened yesterday, we had some U.S. economic data, ISM services coming through stronger than expected, also job openings jumping. There were also Treasury auctions and corporate bond sales that may have affected what we saw in Treasuries. But what about in equities? Was it the rise in Treasury yields that perhaps hit stocks? Are we to that point yet?
I think we are, Christine. So we've always talked about 4.5% sort of being a line in the sand. And we're way past that now, right? So now we're looking at 5% being, the line in the sand where we could see real carnage in the market. But in terms of what happened yesterday, I think one of the biggest things that we looked at was, prices paid under ISM services. So this tells us that inflation sort of is coming back, and the job market remains resilient with the JOLTS data, right? So you have, the Fed looking at the both of these and us thinking, okay, so maybe the Fed overdid it when they were looking at the jobs market being weak, and now they're really going to have to pull back. And with that, we actually saw Fed funds futures move the first rate cut, in fact, not from March, but towards June, July. So we're basically looking at a situation where rates remain higher for longer once again.
And if we look at the U.S. equities market, you say to be, overweight on U.S. equities at the moment, but it's not in big tech. Talk to us about that.
Yeah, so I'm actually still convinced about U.S. exceptionalism, and for a variety of reasons. We know that President Trump is pro-business, and I think that will definitely propel the market a little bit more. What I do like here is that we're seeing the return of old economy stocks. So, cyclicals, large cap, energy, industrials, and that's the kind of stocks we want to be in. So it's kind of exciting times for us. We've been really bored looking at only the Mag 7 going up and up and up. And we've been wanting the market to broaden out, and that's actually healthy for the market. And if that happens, I think, it's going to be, we're probably going to see the S&P 500 move higher, even if the Mag 7 doesn't.
I'm not sure that I've heard anyone say in quite some time that they're bored by the Magnificent Seven, but that's interesting insight. That's Ayesha Tariq, co-founder of MacroVisor. Thanks so much for sharing all of your insights, and good luck over the course of the year as we navigate all of this. Well, coming up, investors in China's $11 trillion government bond market are becoming more pessimistic about the world's second largest economy. We will tell you why. Don't miss it. Next, this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Investors in China's bond market have never been so pessimistic, with some now piling into bets on a deflationary spiral. Asia credit editor Finbar Flynn joins us now to discuss what this means for the world's second largest economy. It's also the focus of the Big Take today, which Finbar is one of the authors of. Finbar, thanks for having us. Talk to us about why people are becoming so worried about this so-called Japanification of the China bond market.
Hey, good afternoon, Jennifer. It is really a huge story. We're seeing bond yields in China fall below levels that are here now in Japan. For example, the 30-year bond yield for the Chinese government bond now is about 40 basis points below what it is here in Japan, which is almost unbelievable. The reason is there are many elements to it. It's the debt overhang, it's the property crash, and in some respects it's also the government's late arrival at trying to actually, grab this by the throat and fix it. So these depressionary and I suppose you should say deflationary forces are becoming more and more embedded in the economy. We have inflationary data out tomorrow, which could show that purchasing, I should say, the producer prices may fall for a 27th month, and the CPI, the consumer inflation, is running at about 0.1%. These are really exceptional levels.
What are the implications here, Finbar? Because as you mentioned, Chinese authorities have tried to step in with stimulus. What happens, though, if this is not enough for the investment community?
So we have, obviously, China is not a market economy. The government has a lot of levers that traditional central bankers and policymakers don't have. And you have two aspects to this. You have the overseas investors and the actual, domestic investors. For a lot of the overseas investors I've spoken to, they believe that the government has enough levers to at least avoid going to the very, very low levels that we saw here in Japan. They believe that the government is not, and the government has come out and they've introduced an awful lot of these sort of restrictions on the trading of government bonds. They've introduced restrictions. Actually, they've told some banks that they don't want them settling some deals in the government bond market that they did last year. So the government has a lot of levers to pull, and people are just waiting for the government to actually come up with more policies in the next few months that might put a floor under some of these yields.
Are there any lessons to be learned from Japan, Finbar?
So the really, really big lesson to learn from Japan is don't kick this can down the road. That was the problem here in Japan. There was a lot of forbearance with companies, and banks give forbearance to companies. And all the people I talk to is that when you get these sort of core mindsets stuck in the people's minds, and deflation becomes a real problem, it's very hard to get rid of. So a lot of people just want China to aggressively attack the property crisis, the bad loan crisis, and to not follow down the road that Japan ultimately took.
All right. Definitely something everyone should take a look at. The big take for today. Bloomberg's Asia credit editor, Finbar Flynn. Thank you so much, Finbar, for your reporting and for joining us.
Now for a look at some of the other stories that we are following. Donald Trump's incoming special envoy to the Middle East says negotiators are on the verge of a deal to secure the release of hostages taken by Hamas in its war against Israel. At a press conference at his Mar-a-Lago resort, the U.S. president-elect repeated a threat that if the hostages were not released before his inauguration, Hamas would pay a price. A panel of experts appointed by Israel says the government may need to spend an extra $3.6 billion a year on the military to prepare for confrontations on multiple fronts. The report also advises preparations for a possible war with Iran and warns of the impact of heightened tensions with Turkey, particularly over the recent change of government in Syria. Well, coming up, we are going to be talking more about South Africa. We get manufacturing PMI out a bit later today as the sector has ended the year on a dull note. We'll break down what 2025 has in store. Stick with us. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Asian stocks follow U.S. peers lower after a surge in Treasury yields on bets the Fed will delay cutting rates due to inflation risks. Samsung rises after Nvidia founder Jensen Huang expresses confidence in the Korean firm despite disappointing earnings as it plays catch-up in AI. Plus, President-elect Donald Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal, and take control of Greenland. It has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabisaja in Johannesburg.
And I'm Christine Burke in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa.
Yeah, Christine, a lot that the markets are reacting to. And of course, news-wise, we're talking about Trump and a lot of those claims that he made yesterday. But let's get to what a lot of the action on Tuesday was for markets. We did see a broad sell-off in stocks and bonds, and that came after that hotter-than-expected ISM data. Right now, if we look at S&P futures, though, rising ever so slightly, but still, we did see S&P futures and NASDAQ futures closing in the red on Tuesday. And that ISM data really expressing a bit of concern that the Fed will likely cut rates later rather than sooner. Also, tech dragging down most of the indices as well. Of course, we were mentioning Nvidia and some of those announcements that we were getting there. Also, that data really dragging up yields, but we're seeing them backing off ever so slightly right now. As you can see, the U.S. 10-year yield at about 4.68. Yesterday, though, we did see the 10-year note reaching its highest level since April. Brent crude up right now just about 0.5%, trading around $77.42 a barrel. And Bitcoin on the screen, we saw Bitcoin, of course, touch that $100,000 print. That was a bit short-lived because right now we are seeing it below that level. We saw the cryptocurrency slide the most in more than 2 weeks. Also, a number of other digital currencies being dragged down. And again, it's that risk-off sentiment that we got on Tuesday following that data really weighing on markets. And that brings me to this next chart. And it's, again, EM stocks and currencies having an effect, if you can see, just over the past few days. We did see EM stocks actually rising for the second day, but again, backing off after we did get a bit of disappointing news on the Chinese consumer. And again, that ISM data potentially showing some more strength in the U.S. economy. We did hear a note from Societe Generale's Phoenix Kalen saying that he would characterize this environment as still kind of the darkest before the dawn. So a lot to pay attention to there. But let's turn to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, what are you watching?
Yeah, Jen, just carrying on from your highlighting of what's happening in emerging markets. I think in Asia, they've really been the ones that are bearing the brunt of this nervousness ahead of Trump's inauguration. We've been seeing not just stock market outflows, but foreign outflows as well, and that's kind of exacerbating the declines we're seeing in the region's currencies. Today, the big decliner, the Indonesian rupiah, coinciding with stock market losses. And this is against the backdrop of how, we've seen this dollar strength that doesn't show any signs of abating, whether you're talking about those Fed signals and the dwindling expectations of seeing a rate cut before July. There are also these uncertainties about Trump's tax and inflation policies, and the yuan weakness as well is kind of compounding the regional currency's weakness. And today, as you know, the PBOC came through with fixing support, strongest versus estimates since April. So not just our stocks on the back foot today, Asia currencies are also losing ground. Jen?
Thanks so much, Avril Hong in Singapore for us. Now, South Africa manufacturing PMI is due out later today. The sector has been on the decline with exports slowing on global manufacturing conditions. So what does 2025 have in store for the country's economy? Joining us now is Nolwandle Mthombeni. She is an independent markets analyst. Nolwandle, great to get you back on the show. Before we get to South Africa, let's just carry on with part of what Avril was talking about, and we were alluding to EM assets right now, or today at least, facing a bit of pressure. How would you characterize this environment for EM assets?
I think there's a lot of pressure on EM given that the inflation outlook is going to be an increase in inflation and how that will impact the emerging markets, particularly because of China, and where we see that there are lots of risks to growth coming from China, and it is a big part of the EM basket. However, when we think of EM markets, we know you can't just isolate China. We need to think the basket holistically. And we see that there's going to be lots of good growth coming out of EM. It's obviously going to be higher growth than developed markets. And we also have seen that there's also going to be, there's very favorable valuations. So it's still an attractive valuation. So if you look past the noise of the day-to-day basis, I think EM markets still presents a good opportunity in terms of growth. But then we need to be very selective because some countries within the EM baskets are more exposed to China, to the trade protectionist policies that we're expecting to happen when the Trump administrations come into power.
And I found it interesting. We did get a quote from Winthin of Brown Brothers Harriman saying that the only sure trade for 2025, though, is long volatility for EM. Do you agree with that, or would you say there is something that you could trade as a guarantee for this year?
So, I mean, I don't see if there's any guarantees per se, but I think it is good to have increased exposure to EM and being long risk assets. I think diversification will always be key when in terms of investing, but we need to kind of take a bit of a cautious and wait and see approach, especially since the full impact of the trade policies that we're going to see is quite unknown at the moment. So I would say yes, go long EM assets, but still have balanced with different exposures as well.
Let's dig into South Africa, since we were talking about that data coming out today. A lot of the trade that we are seeing, at least the price action with the rand, is indicative of what's happening with the dollar. Where do you see rand price action being dictated by for this year?
So I think we're going to obviously have some strengthening of the US dollar, which will work against the South African rand. But I think overall the rand has continued to be resilient. And this is because we have seen a little bit of green shoots in terms of the economy, be it structural reform where power generation has improved. We're seeing some consumer spending, and we're going to see some domestic improvements there. So these sort of small gains are kind of going to help in terms of improving trade and improving activity within the economy, and hopefully will boost to GDP. But at this point, there's a lot of uncertainty going through. So we expect that there's some downside risk, of course, but there's enough green shoots and some momentum to be more positive about South Africa and the currency if we look at just on a see-through basis in terms of the economy itself.
What is the downside risk?
So I think the main downside risk now is that reforms are slower than expected, or we have some roadblocks. I think, we have so many structural problems here that really are stopping us from reaching our full growth potential. We're coming from 1.1 expected to be in 2024 in terms of real GDP growth, and in 2025 there's expectation of between 1.5 and 1.7. But really we need a 2% to 3% to really kickstart the economy. So the pace that we're currently going through in terms of reforms has been so slow, and I think any delays in that and any distraction in terms of the government of national unity will shake investors and may kind of create some impediments to growth.
So do you think then investor sentiment will continue to be sitting on the sidelines a bit until they get a little bit more clarity about the path ahead?
I think definitely. I think we've been sitting on the sidelines waiting for good things to happen in South Africa for a very long time. And unfortunately, us resolving, for example, the energy crisis has been around for over a decade now. So, and it's good to take a cautious approach given that there are a lot of new things in the works. Like the government of national unity has only been in power since May last year. So they're still finding their feet. There'll be some teething problems. And with the new government in power and change in power, hence policy direction also changes. So I think there is room to be a bit cautious and sensitive, and I guess it's too early for animal spirits.
And outside of South Africa and China, you said it still is important to be invested in the EM space. Where else do you think investors should be long in EM?
I think I'm still a favorite of India. India, we're showing very good, over almost 7% growth there, and there's more going positive for India than other economies. So in terms of exposure to baskets, I've been over the last 2 years, approximately last 2 years, I've been seeing more interest in India, and I think there's good potential there.
Does India overtake Japan then in terms of strength in the economy? We were talking earlier about the Japanification of China. I mean, where do you see these two markets playing together?
I do think that, in terms of India's positioning, it's actually also in terms of market power and in terms of its role in the global economy is becoming bigger. Whereas, and we're not seeing the same strength coming out of Japan. So I definitely think that we are seeing not just from its own domestic environment growth there, but within a global sphere. India is also, getting some gravitas as well.
And I want to go back to what you were saying about strong dollar because, again, we did hear that potentially we have a story out right now just about one of the most popular investment calls is that strong dollar, weak EM, but apparently that could be wrong. You still believe that we'll see a strengthening dollar, even though we don't know a lot of what Trump is actually going to be able to implement?
So all the evidence is, points towards the stronger dollar. I mean, at this point in time, it looks like the way it's going, and what we know about Trump, when he says he's going to do something, he's probably likely to deliver, So that's the expectation, and unfortunately, market works on expectations. So as long as the market as a whole is expecting that, it's more likely that it will start pricing that forward, and until those views change and expectations change, that's likely what's going to happen.
All right, we'll see how that all plays out, but we have to leave it there. Nolwandle Mthombeni, independent markets analyst, joining us here in Johannesburg. Thanks so much.
Jen, let's talk more about tech now because Nvidia's shares fell after a wide-ranging product presentation by CEO Jensen Huang failed to win over investors in the AI chipmaker. Huang also spoke to Bloomberg Technology about plans under the incoming President Donald Trump. He also spoke on the impact of AI on the gaming industry. Have a listen to all that.
AI is going to reinvigorate the video game industry. On the one hand, for developers, it's going to reduce the cost of creating the content. On the other hand, all of the characters that are in the games are going to be smart characters in the future. So every time you interact with them, they're going to be interacting with you in a much more intelligent way. And so the games are going to be more interesting. The characters are going to be more interesting. The content development cost is going to decline. And that's going to be really great for the industry. And so I think that the future is really bright for video games and these virtual worlds, and artificial intelligence is going to really reinvigorate it.
Project Digits. May I pick it up?
Yeah.
$3,000 Project Digits.
Yeah.
A supercomputer you can
sitting
put on
right
your
next.
desk.
Exactly. Could you imagine you're just sitting there just like that? You're working on your PC.
Well, I can't imagine. Why would I need one of these? Probably not me. But how big is the addressable market for this? What is the addressable market?
There are 30 million software developers. There are probably something along the lines of 10 million designers around the world. Probably another 20 million creative artists. Hard to say exactly how many students. I'm going to guess probably a couple of 100 million students around the world. Everybody's going to have to afford it. Everybody's going to have to they can afford computers. And so if they can afford computers and they would like to have a companion that helps them do AI, this is the way to do it.
Can I just clarify something on it? I think you said on stage Mac OS, Linux, and Windows, but the communication said just Linux.
No. Whatever computer you use, you're literally enjoying how it's going to be used. It's sitting right there, and you just connect to it wirelessly like it's your personal cloud.
I promised the audience I'd clarify that because they're excited. We're running short on time. President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if Nvidia is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw XPeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. It's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. How have you prepared for that, Jensen?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective. And I'm sure that the administration will make the right moves. That's in the best interest of our country.
That was Nvidia CEO Jensen Huang speaking exclusively with Bloomberg Technology co-anchor Ed Ludlow. Coming up, China's foreign minister kicks off his tour of Africa as Namibia seeks investment in nuclear power from Beijing. We will have the latest next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. One of the world's largest uranium producers is seeking investment from China in nuclear power. Namibia wants to boost its role in the global push to clean energy. President Nolwandle Mthombeni met on Monday with Chinese Foreign Minister Wang Yi, who is on a week-long visit to Africa.
The friendly cooperation between China and Namibia has great prospects. We share political trust, and our economies are highly complementary to each other. Most importantly, China has the firm policy and conviction to strengthen friendship with Africa.
Let's get more with Bloomberg's Ndiro Oganga, who's joining us from Kigali. Ndiro, talk to us about Namibia's hopes for Chinese investment into nuclear power and some of these discussions that they're having.
Hi, Jen. So the Namibian president says that they want to add value to their uranium for peaceful development of nuclear energy in the country. And we're seeing this cooperation begin already. In September, China General Nuclear Power Group, together with NAM Water, formed a joint venture to build a $161 million desalination plant, which will service uranium mines and also neighboring communities. And Namibia is also seeking to deepen cooperation with China in areas of emerging technologies. They want to tap into the growing outbound tourism market in China and also secure funding to upgrade and build a new international airport. And just from what the foreign minister was saying, China sees Africa as a place of endless opportunities and development opportunities. And this could come in handy. It would be an alternative market for their solar panels, their EV industry that have heat overcapacity in US and also the EU. And also mega infrastructure projects are coming up on the African continent. This could give work to struggling Chinese infrastructure firms because back in China, local governments are cutting back spending and are struggling with indebtedness.
And Ndiro, this is, of course, important for China. They've had 35 years of foreign ministers making these types of visits to the continent. How else is this visit supposed to play out?
Well, we're likely to see him, or rather we're certain that he's going to visit other African countries. He's going to Nigeria, he's going to the Republic of Congo, and he's also going to go to Chad. And this visit, according to the Afrocina Center, is meant to solidify that relation between Africa and China, but also kickstart the implementation of the action plan from FOCAC Summit that was held in Beijing. And part of this action plan was cooperation in areas of trade, healthcare, and connectivity, where $50 billion was pledged to come into the African continent. So this just lays the ground for the next 3 years of cooperation between Africa and China, leading to the next summit.
Bloomberg's Ndiro Oganga with the reporting there in Kigali. Ndiro, thanks as always for joining us. Now, for a look at some other stories we are following this morning. Egypt is to hold talks with Somalia next week to discuss a troop contribution towards a multilateral force battling Islamist insurgents in the Horn of Africa nation. Somalia is also considering reversing a decision to exclude Ethiopian troops from the peacekeeping mission after a thaw in tensions between the two nations. A human rights organization in Mozambique has asked the nation's attorney general to probe severe human rights violations after a jailbreak on December 25th. The CDD reports that security forces killed at least 100 recaptured prisoners and buried them in mass graves after the breakout. And the U.S. has sanctioned the head of Sudan's Rapid Support Forces paramilitary group, saying the group was guilty of genocide. The Treasury Department says the RSF used its forces to engage in a brutal armed conflict with Sudan's army, killing tens of thousands of people and leading to the displacement of 12 million others. Now, coming up, fighting for a share of a $1 trillion market in Borneo's jungle, how advocates of carbon capture and storage are hoping for a revival of the industry in 2025. That story next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Advocates of carbon capture and storage are hoping for a revival of the industry in 2025 as governments and polluters struggle to make progress on net zero emissions goals. One of the biggest projects in the world is trapping millions of tons of carbon in muddy peat bogs in Indonesian Borneo. Bloomberg Originals has been taking a closer look.
This patch of tropical forest protects one of the most endangered ecosystems on our planet. It could have been cleared for palm oil. Instead, huge multinational corporations have paid to safeguard it. It's called Rimba Raya, and it sits on the island of Borneo in Indonesia. The land traps and stores carbon dioxide. Carbon credits are designed as a way for companies and countries to compensate for the emissions they produce. In Rimba Raya's case, carbon credits fund the protection of its forests and peatlands that can store 8 times more CO2 than a typical rainforest of the same size. Its credits also pay for conservation efforts.
This is an emerging asset class. It's an opportunity to exponentially grow the global economy based on the ever-increasing value of these natural capital assets.
And that means a fight over the spoils.
So what we have here is essentially a battle between companies and the Indonesian government, all fighting for a slice of the profits.
The fight over this protected jungle highlights one of the most pressing questions in the climate change battle. Who profits from saving the planet?
And subscribers can see that documentary in full on the terminal or at Bloomberg.com. And also it'll be available later on the Bloomberg Originals YouTube channel.
Now, let's take a look at some of the other stories we are following. JPMorgan has joined the rest of Wall Street's biggest banks in leaving the Net Zero Banking Alliance. Departures from the Climate Finance Group follow intensified attacks by the Republican Party, which has criticized what it calls woke capitalism. JPMorgan says it will continue to work independently to advance low-carbon technologies and energy security. Now, let's take a quick check at markets right now. Take it away, Christine.
Well, if we just take a look at these markets, here's what's coming up today that you want to keep an eye on. We have ADP private employment report coming out of the U.S., also jobless claims, Fed minutes, and we hear from Christopher Waller, of course, one of the Federal Reserve policymakers. That's after we had a steep sell-off yesterday in bond and stock markets. We are looking a bit better today, but the question is, will that continue? And that is it for Horizons Middle East and Africa. I'm Christine Burke in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe next. This is Bloomberg.